Interesting pattern showing up here. Bitcoin's getting chopped up below $80,000 right now, and we're seeing some serious pressure from multiple angles. Rising bond yields, oil prices spiking, and geopolitical tensions around the US-Iran situation are all weighing heavy on risk assets. The macro picture is looking pretty challenging for crypto at the moment. What's really catching my attention is this $76,000 support level we're dancing around. That's the line in the sand right now. If Bitcoin breaks below that, I'm watching $74,000 to $75,000 as the next major demand zone. Below that, we're talking about $70,000, maybe even $65,000 if things get ugly. On the upside, there's a wall of resistance sitting at $80,000 to $82,000 that's been rejecting price hard. The positioning data is telling an interesting story. We've got high unrealized profits leading to profit taking, which historically shows up before local tops. US spot Bitcoin ETFs just had their biggest single-day outflows since January, losing nearly $650 million. That's institutional conviction weakening right there. Retail demand on Binance is down 73%, and we're seeing aggressive futures selling topping $2 billion. Technically, Bitcoin got rejected hard from that $80,000 to $82,000 resistance zone. We're trading below the 100-day moving average and stuck under the descending 200-day, which isn't bullish at all. Short-term holders just sold $770 million worth of Bitcoin at a loss, adding more selling pressure. But it's not all bearish. Michael Saylor's company just scooped up another $2 billion worth, pushing their holdings over 843,000 Bitcoin. Exchange reserves are declining overall, which supports the long-term supply squeeze narrative. Long-term holder dominance is building, showing conviction among seasoned players. Here's what I'm watching. If Bitcoin can clearly reclaim $80,000 with real volume, I'd look for entries around $80,500, targeting that 200-day moving average at $82,400. Stop loss just below $79,000. On the flip side, a decisive break below $76,000 support could trigger shorts around $75,800, targeting $70,000 or even $65,000. The key things to monitor are spot demand recovery, defense of that critical $74,000 to $75,000 support zone, and macro developments. We need sustained positive ETF flows and a positive Coinbase premium to signal real institutional conviction. Without that spot demand showing up, we're likely to see more choppy action or further downside. That's what the data is telling us.